We're going to keep talking about gold. Spencer Patton is with us. He's the founder and CIO at Steel Vine Investments. It's an option-selling hedge fund and invests almost exclusively in commodities. He's with us now from Nashville, Tennessee. Spencer, thanks so much for joining us this morning. Gold hitting yet another record. Just how high could we go before this year ends? Do you see 2,000 an ounce being very realistic?
It's definitely a possibility. If we get something interesting out of the end of the week meeting out of Bernanke this Friday, gold could be at 2,000 by Monday. It's that realistic. If we get a quantitative easing announcement, then 2,000 is absolutely in the cards.
So Spencer,
I don't expect that's going to happen.
Can you handicap? Well, that's what I was just going to ask you. I mean, how likely is it? I mean, some people are saying Bernanke, even if he will do some sort of support, is going to keep that language, at least in his pocket, past the weekend. So you're saying it's a slim chance?
I think it's a slim chance. I think that he will certainly not be advertising that he's going to raise interest rates or do anything that would be bearish for gold, but I don't expect some explosive firework on Friday. Honestly, I think that gold has shown a very scary sign for a short-term pullback. Just this morning, it was up $45, and it's pulled all the way back to just up 10 or 15. Silver rallied $8, and it was up to $44, $45, and now it's pulled back. This may be the start of a good buying opportunity, but ultimately a pullback this week that could be $100 or $150.
Spencer, gold is still up even with a slight pullback this morning. I wonder, given what Dominic was just telling us about exchange-traded funds in gold, how does the rising popularity of GLD and other ETFs make gold a much more volatile trade than in the past?
It is so much more volatile because the futures trading in gold, even though it's increased in value and liquidity, is still not all that liquid. So GLD has been an important instrument to allow a lot broader population to trade in gold, but it is still a very volatile instrument right now. And it's like trying to buy it up here is like trying to jump on a freight train moving 100 miles an hour. I mean, you could be up or down $50 in gold by the afternoon.
And then you also have big holders of GLD like John Paulson. There's been a lot of talk that because his fund has not been doing well, at some point he may need to raise cash and perhaps sell some of his better performers like GLD. What kind of impact could that have on gold prices,
That
therefore?
is so true. That is so true. I think that could have a very large one-day or one-week impact on gold. I don't think, obviously, it'd be a long-term thing, but funds like Paulson have just gotten really hammered. So it's important to remember that that could hurt gold prices quickly.
Spencer, we've been talking a lot about gold, of course, with reason. You mentioned silver. Just how high could we see silver going? Is this just a cheaper way for investors to get involved?
I really think it's a cheaper way because unlike gold, silver has a lot more industrial use, and so we are going to see silver that's a lot more tied to an economy. So I think that we're probably getting towards the top end of the range here for silver, even if gold continues above 2,000. It'll certainly pull silver along, but I don't see silver going to $75 an ounce or $100 an ounce without a major economic strengthening.